Hello, everyone. Welcome to today's live session to kick the week off on Monday. I'm a little bit hoarse after screaming for Wales at the weekend, but that's done now, so it's back to normal. So let me just put the risk warning up. Just to say, we're going to make some changes to these because of some other things we're doing. For the foreseeable future, I'm going to drop them back to 3 days a week. So I don't think we'll miss out on too much. So we're going to do these 3 days a week, and we're going to try a different time. I think we're going to try and see how popular 10 o'clock in the morning is, because that way you've got the whole day of maybe opportunities to look out for. So I think from Wednesday, that's what we're going to do. We'll see what the numbers are like, see if people are happy with that. Of course, if you can't make 10 in the morning, it gets recorded. So if you can't make it live, as soon as I've finished talking, the thing is available on YouTube as the recording anyway for you to watch whenever you want throughout the rest of the day. But we've been thinking that maybe that ends up being a bit more useful for people, having it in the morning. So the levels and stuff that we talk about, you've got the whole day to watch to see how it all goes. But to never miss out on these slight changes we're making, we do send a push notification out from our trading app. But if you're not a client of ours, you won't get that. And also, I don't like sending push notifications every day because it can get a bit intrusive. If you don't want to miss out on this stuff, just make sure you're subscribed to the channel by clicking the subscribe thing, the button down there on YouTube, and that alarm bell next to it. I never knew what that did until I started doing these. But if you click on the alarm bell, it means you get a notification off YouTube whenever we go live or put up new content or any of that stuff. Okay, so there we go. And as usual, if you're watching this live, if you've got any questions, use the chat thing on the right hand side. Put any questions in, and I'll try and answer them as I go along. If you're watching the recording, put any questions in the comments down below, and I'll come back and answer them if there are any. Right, that's it. Let's get cracking. Just talk about the week ahead. So, I mean, clearly, I don't want to talk about Brexit too much today because it just hasn't moved forward. But clearly, that's going to be a focus for the pound this week. But apart from that, it's a very UK-focused week when it comes to data. So I think last week we had something of a quiet finish for pound against the dollar and other markets. But this week, tomorrow morning, 9:30, UK employment data. So you'd expect some volatility off that. Wednesday, 9:30, UK inflation data, expected to be, I think, 1.9% for the year. Then at 2:30, because they're an hour closer to us at the moment in the US, 2:30 on Wednesday, crude oil inventories. Then at 6 o'clock UK time, it's arguably the biggest event of the week, Brexit, forgetting about for now, the US interest rate decision. So that's 6 o'clock Wednesday night. We're not expecting any change, which has been the theme, of course, with plenty of these central banks. But maybe if they give some sort of indication on how they see the US economy performing, all that sort of stuff, we could normally get some volatility. Then Thursday morning, we're back to UK retail sales again. Thursday morning, 12 o'clock Thursday, Bank of England's rate decision. So again, it's all UK this week. So no changes expected to the UK's base rate, but as usual, what do they say about the economy, about Brexit, blah, blah, blah. So that could be a volatile one on Thursday. And then Friday, to round a week off, we've got Canadian inflation data. So again, the Canadian dollar could be one to watch. So there is, and then there is, of course, in the background, all the usual Brexit nonsense going on as well. Politicians trying to decide what they're going to do. There is going to be a vote this week, I think, on the latest deal. So we'll see what that brings. But it's a bit of a chock full of data this week. So let's get into it. Last week, we saw US stock markets finish positive, I think, on Friday, but we definitely saw new highs for the year. Oil new highs for the year as well. So we'll take a look at those markets. But I want to start off with the euro today. Euro US dollar. I mentioned last week, I did finally end up buying last week. I think it's one of those, I've been watching it going up all week and talking about it all week. And I thought, well, why haven't I bought it? And I ended up buying at 113. Was it last Wednesday? About here we go. So it was around about here. And it has pushed a bit high. I think the euro is a really interesting market. It's been a bit of a pain in recent months, the euro against the dollar, because we've had this lack of volatility, right? We've seen a relatively tiny range. November, it traded as low as 112. And then January, it traded as low as 115.5. So we've seen a 350 point range pretty much for the euro against the dollar over the last, what's that, 4 or 5 months or so. It's been a really tight range. But I think it's interesting, and I'm going to use a very rare literary reference here. There's the famous Sherlock Holmes story, isn't there, about the dog that didn't bark. And I can't remember what the story is, but the fact this dog didn't bark in the night was a good signal that he knew the person who'd committed some crime. And I think the very tenuous link here to the dog that didn't bark is what the euro keeps doing when it breaks down, right? And we talked about this a lot last week. And I'm just going to go back into it again because I think maybe it makes it an interesting market for the rest of the year. So we had this big level in euro dollar in August, around about 113, bounces, comes back to it, November, bounces, breaks in November. It's a big level breaking, big support breaking, but we don't get the follow through. The market reversed and bounced back. Then, when was it? It was a week last Thursday when we had that latest European Central Bank rate decision, and they downgraded the outlook for the eurozone. We saw it break again. It broke to its lowest euro dollar since June 2017. So we were on a 21-month, 22-month low, whatever it is. But we've seen the same thing happen again. We've seen the euro bounce back. So it's bounced back about 150 points. So even though it has been weak, there doesn't appear to be the conviction to be a seller on these breaks. It breaks and then it just reverses it really quickly. Breaks for a day and bang, it turns around. So I wonder if, for the rest of the year, are we going to see maybe some sort of euro recovery? And I'd use the same argument for that I had coming into this year for the pound. We knew coming into this year what the worst thing was from a Brexit point of view for financial markets, and it was no deal Brexit. That from regardless of the politics, a no deal Brexit was going to be the worst thing as far as markets were concerned. But of course, because of all the indecision we've had, maybe we don't have a no deal Brexit, maybe we have a second vote, maybe we get an extension, blah 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 blah. It's all been good for the pound. So I wonder with the euro, we know how what a mess, not a mess, but how it's going to be a tough year for the European economy. We have the Italian Italian economy in recession. Germany just dodged a recession. Maybe all the bad news in the short to medium term for the Eurozone is out there. We are not seeing the euro falling off a cliff on this ongoing bad news for the economy. So I wonder if finally the story, by the time we get to the end of this year, is that the euro has staged a half decent recovery. Yeah, so I think maybe that's the interesting story. I think maybe for this at the moment, if we flip over to the hourly, so I think if we have a look at the shorter term, this recovery off those lows from Thursday is still going. We saw a bit of sort of faffing around 113, and it came back to it on Friday actually. So on Friday, I bought on Wednesday, and it made no money by Friday, and it's finally starting to get a move on this week. So that trend is continuing. So I think that the levels to watch on the euro is trading at 113.50 at the moment. It's broken out through the old resistance. Yes, it's looking a bit overbought, which you'd expect after the recovery it's had. So we are looking a bit overbought. If we saw this afternoon, tomorrow, the euro come under some pressure, I'll be watching the 113 area again, because again, maybe we have people who feel they've missed the boat and want to be a buyer at 113. Let's see what happens. There are definitely some hurdles on the way up. I mean, clearly these February highs, are they the highs for the year? No, they're the highs for late Feb around about 114.20, so 70 points higher than where we are now. Maybe that ends up being a problem. So that's the big hurdle to clear. But if we can clear that, then I think we are looking at the 115s. So for me, because there's a good question, RSI and that euro US dollar has strong pushes down though. It does. It does fall off a cliff, doesn't it? Because the euro, when it falls, it has fallen really quickly, and it has dragged that euro lower. Let's flip over to the dailies. When it goes, and when the euro breaks, it does go oversold. That move on that Thursday on the RSI, that's the most negative we'd had the RSI since the November move to multi-month lows. But I just wonder, I think, let's say we saw the euro get battered over the next couple of weeks. If it comes back down to the low 112s, I think it's an interesting one. If, like me, and no one's got a crystal ball, no one knows, but I'm thinking, if we do see maybe a 6 to 8 month recovery from the euro, if it drops back to maybe the mid 112s, maybe that's a good entry point. But I think it's interesting that we haven't had the volatility, but we have had it breaking to fresh lows, but no conviction to keep selling it. You look at markets like oil, for example, or stock markets, since they've been bouncing back since January, when we've broken through previous highs, there's been real force that's pushed these markets higher, but we're not seeing this in the euro. So I think it's interesting. I think maybe that's the dark horse, the outsider for a recovery this year is the euro against the US dollar. So in the short term, still pushing higher. 114.50, 114.20, sorry, is the immediate hurdle. So it wouldn't be surprising if we did see it push high. Maybe we have a bit of back and forth over here. We've got that interest rate decision on Wednesday night from the US. So Wednesday afternoon could be a quiet one, but maybe when that's out of the way, we'll have a bit more direction. But now that 10-day recovery on euro US dollar is still going. So I think it's definitely not the most exciting market at the moment, but it is an interesting one, I think, from a bigger picture point of view, considering the state of the European economy. Bit of Brexit in there as well, of course, and also just the fact that there's no conviction behind selling it when it does break lower. So let's see. So I think for now, we've started positive. We've started how we ended last week. The recovery is still going. Any dips on the euro in the short term towards the 113 area, for my money, look like maybe a buying opportunity. So it's an interesting one. We'll keep coming back to it, obviously, this week on euro US dollar. Let's take a look at the pounds. I thought what was really interesting last week. I think everyone is sick of Brexit at the moment, but maybe it's just me. But I think everybody's sick of hearing about Brexit and the lack of progress. This time last week, pound US dollar, we had this massive run from 129.50, 129.60 up by 10 o'clock, 11 o'clock on Monday night, up to 133. So we saw this massive rally last Monday. We had the votes, of course. Then we had the big sell-off the next day. And then the end of last week, we had 3 votes on Thursday, didn't we? And the market hardly moved at all, relatively speaking. So it's almost as if the pound has got sick of Brexit. But I think, again, so looking at it going into the next sort of day and a half, 132 last week had been a floor. This is the hourly chart we're looking at. So 132 had been something of a base for the pound. Touched it on the 14th, 10 o'clock in the morning, came back to it in the afternoon, came back to it the next day. Yeah, so we had seen 114. This was Friday, wasn't it? Hold the market up. We've sort of traded up to 133. We're now at 132.45. So again, if you really wanted to do a short-term trade on the pound, watch what happens. I flip this over to a 5-minute chart, and you can see how whenever we drift down to 132.20s, 132, the buyers come back out. It's only 20 points, 25 points below where we are now. So maybe there's an opportunity this afternoon there. But if we flip back to the dailies, we do have a lot of UK data out this week, starting with unemployment numbers tomorrow at 9:30. But I still think the risk is that data doesn't have much of an impact, and it's all about waiting for the next step in Brexit. There's that EU summit on Thursday, isn't there? So it's a really, really busy one, I think, this week. But at the moment, on the upsides, there are so many hurdles from these highs in June 2018, about 134.80. Then we have the highs July around about 133.60. So it's not surprising over the last 3 weeks we have seen it struggle to get much momentum above 133. Yeah, so I think there were some great opportunities last week with the volatility. As that volatility died off, I think it's maybe harder, but 132 in the short term is a level. But maybe it's a bit more interesting if we see it under pressure and go back to last week's lows. So I think it's a harder market to call than euro US dollar at the moment, because we have that trend. Yeah, so I would agree with what you're saying there, Tony, about no trend and just a directionless week. Let's have a look at euro sterling, then we'll get into the other markets, because again, if we're going to go with this euro, well, well, one outlook that maybe we'll see the euro recover this year. I think it's interesting what's happened in euro sterling. If we go back on the daily chart, because of course Brexit affects both the European economy and the UK economy, we have had a bit of a tug of war euro sterling over the last 18 months. It's been pretty directionless, but a range 86 on the bottom and sort of 90, 91 on the top, and it's been stuck in this range. We did see the euro again. It was that Thursday. I think it was that Thursday of the European Central Bank rate decision, break down to its lowest against the pound since in 22 months or whatever it was. So again, if you were going to go, good place to buy your euros the other week. But again, we haven't seen the follow through. So again, maybe the interesting play, the interesting medium term play, we have seen so far 84.70 be a floor for the euro against the pound. We're currently trading 100 points above that. If you thought, well, hang on, maybe the pound optimism has gone a bit too far, maybe the euro pessimism has gone a bit too far, we're going to see a bit more of a return to normality. Potentially there could be 300 points in this if we're going to pull back to just where we were on the 14th of Feb, so I think it's sort of 250 points. So I think it's an interesting one down here, euro sterling, because it just is not breaking. We're not seeing the follow through after the break. So maybe we'll see a pullback into the middle of that recent trading range. Let's see what happens. But I think even though we've seen a lack of volatility in the euro dollar, perhaps it will be an interesting few months. What should we look at next? Let's take a look at. We'll do stock markets last. Let's take a look at the oil price. It's a strange one, oil. I think at the moment, we've some fantastic swings in the last 3 months of last year. Of course, it went from, this is US crude, so it went from 77 in October to 42.5 or something Christmas. We've bounced back, great bounce back. And I've been saying for a few weeks now, 58 to 60, I think is going to be a problem. The market did push last week as high as 59.22, right? So 59.22 on our market was the oil price high. End of last week, I think, was that? Yeah, that was Friday, wasn't it? So we finished last week strong. A bit indecisive today, but again, we're not seeing the same sort of follow through when these highs break. So for me, you can't argue with that recent trend in oil, right? So that recent trend has been most definitely up. And if we go back to the Christmas lows, we've still got this market moving higher. We've got massive divergence on the RSI. So the market pushes to a high, pushes higher, pushes higher. The RSI on the hourly is falling away. So that, and I'm not a big fan of every signal off an RSI or a stochastic or a MACD. I think a lot of this stuff is massively overrated. But when you get divergence, it does point to momentum maybe running out. So even though that trend is still up, arguably, for me anyway, the risk reward for oil favors some sort of a sell-off from here. I think maybe 60 will be a barrier. So if I was trading it up here, go short wherever it's trading now, 58.90, with a stop maybe above 60 if I had to do a trade. But that trend is still up, but it just really is struggling to build any momentum. So if it's going to turn around anywhere, we're here. If it breaks through 60, I will completely reverse my opinion and think, okay, well, that's it. It's a big level that's broken. We've got to start looking at much more aggressive targets now, back up to maybe 65 where it was beginning of November, those sort of levels. But I just can't help feeling that a lot of this momentum has gone. We do have this again on the dailies, fair bit of divergence going on there, and it's struggling to find momentum up here. Let's see. Let's see what happens. Let's say we did get a half decent sell-off. What are the levels to watch? Well, clearly last week, again, this is Friday, I think, isn't it? March the 15th was Friday. The market got knocked down 1 o'clock in the afternoon to $58 and has bounced back about $1 off that level. So for short-term traders, if we saw a bit of pressure this afternoon, 58 I think is a level to watch. But I think just because it's come so far this year, we are overdue a correction, and maybe 60 is the level that starts from. Let's see what happens. But a bit I think difficult over recent days, that one. Let's take a look at gold. Gold, I think it's been, where is it? It's back above 1300. Gold, gold is that daily chart for gold, is what we've been following. And I think I've said before, I've got a few sort of longer term quarterly contracts on gold, just looking to ride this trend this year and see where it takes us. But for now, that recovery off the 1160 area is still going. We had a bit of a pullback from 1345, 1275, the lows for the year held. We've seen the market push its way up, sold off, bang. So for me, that all still looks positive. The immediate target, we went oversold on the RSI. So this is where I think these overbought, oversold indicators do have some use, rather than trying to just follow them blindly and thinking there's some sort of a holy grail. Use them in the direction of the trend. So the sell-off in gold early March was the first time the RSI had gone oversold since November. Yeah. So again, we're going to buy into the trend. That was the opportunity. So if we saw it under pressure again, watch for the RSI sell-off. The MACD has just about flipped positive over the last couple of days. So for me, the immediate target for gold, a run back up to those highs, 1345, 1350. And then after that, maybe we go and have yet another look at sort of the 1360 area. And this has been a real problem, 1360 to 1370. The highs from July 2016, the highs in the first quarter of last year. So this is a real problem, a bit higher than where we are now. So let's see what happens. But gold's still positive. If we flip it over, let's have a quick look at the short-term chart on gold. So there's that 1275, the lows from the year holding. Market traded down to 1280. 1290 has emerged as a level. March the 11th, got back as low as 1292 last week, and we're $10, $13 above that. So again, if we did see it come under pressure, watch this whole 1280 to 1290 area, because we've seen solid buying there in March. But for me, I think if we can crack 1312, be looking for it to push back into the 1330s. So all positive on that one. Right, stock markets. I think it's going to be a really interesting week for stock markets. For me, maybe this week is about the euro and stock markets, if we can forget about Brexit. But let's start off with the S&P. So we'll have a look at quite a few of these markets. We'll do the S&P, the Dow, the Nasdaq, the DAX, and the FTSE. So let's just start off on the daily. So I think the S&P is a great market. I think the Dow is the one that everyone thinks about, I think, but the S&P is a much broader market for the Dow. It's than the Dow. It's 500 stocks. It's one that lots of professional traders in the US would have started trading years ago with S&P futures. So I think it's a great market. If you're going to look at one market, the S&P 500. So where are we? So October last year, the S&P traded up to about 28.23, 28.19 in November last year. December last year, 28.15. So we know 28.15 to 28.25 ish was a massive barrier for US stock markets last year, and eventually, they couldn't crack it, sold off really heavily into Christmas. We've come back really strongly, and on Friday, the market traded as high as 28.32. Okay, so it's already having a look through these old levels. This is a massive barrier, but for now, these markets, the S&P keeps pushing through it. If we let's say we trade through 28.32 again this week, so it trades through Friday's high, and we hold there, and it all starts to look like a valid breakout. The next logical target is for a push to these all-time highs from October last year, so up at 29.40. So which does, I think, seem incredible considering how gloomy everything was in December last year, that maybe if this strength continues in the next couple of months, we could see fresh all-time highs for stock markets. But let's not maybe get too ahead of ourselves. I would expect this whole area to still be a problem. So maybe we'll have some bigger sell-offs during the days this week, which could be opportunities. But I think it's going to be a really interesting week because all of these stock markets are bumping up against what had been real problems. If we're looking at things again like RSIs, look at, the RSI went overbought, first of all, 2 months ago, and because we haven't really had a chunky sell-off on the way up. It's just stayed overbought. We did have one sort of early March, and again, it's turned that round, and we've pushed out to fresh highs for the year. So it's really interesting, how these markets have built up and recovered this year. But let's take a look at some of the shorter term levels. Let's flip this over. Here we go. So going into today, I'm a big fan of looking at the previous day's highs and lows. So if we pick up on, this was Friday, so it was 5 o'clock on Friday, between 4 and 5, sorry, on Friday, that we saw that move out to 28.32. The market sold off a little bit into the close, but held pretty steady. Of course, because our clocks haven't gone forwards or back, whichever way they go, US markets this week are still opening at 1:30 UK time. So in half an hour's time, they open. But I think the levels to watch going into today, Friday's lows, first of all, about 28.10. I think was the low on Friday. After that, we've got the lows left from Thursday, around about 28.04. So for me, if the S&P comes under pressure this afternoon, we have basically the whole zone from 2800 through to about 28.10. If it pushed back to there, to me, that looks like a buying opportunity on the short-term chart. But I think that the bigger picture view is going to be really interesting because we are bumping up at these levels, these big levels, and actually pushing through on Friday. So maybe we have a bit more back and forth. Let's do a quick look at the other two US indices, then we'll get into the European markets. Here we go. So for our Dow, is it the Dow I'm looking at? Yeah. So the Dow levels, I can even remember off the top of my head, 26,000 to 26,300 were the highs for the Dow. And again, it's really interesting. The S&P last week on Friday pushed out to fresh recovery highs. The Dow hasn't. The Dow's been a bit of a lagger, and I think it may be things like Boeing maybe holding the Dow back. So clearly the Dow's only 30 stocks, so there are some real laggers in there. We're not seeing this market push higher. So that's the big obstacle for the Dow, 26,000 to 26,300. Let's take a look on the hourly chart. Here we go. But again, you can see the lows left from Friday and actually pretty much Thursday as well at around about 25,620. Let's call it 25,600 because there's also this low left from earlier in the week. So the Dow is currently trading, 25,827. You can see it there. If we saw it under a bit of pressure this afternoon or tomorrow, just watch to see how it performs near these old lows. So these markets are still positive. Let's make no mistake. We saw a really, a strongish finish for the week last week, but they don't go up in a straight line. If we get a 2 or 3 hour reversal that wipes 150 points off the Dow, it could well be a buying opportunity, assuming these old levels hold. So let's see. But really interesting because of where these markets are in relation to the highs from the last 3 months of last year. And then the NASDAQ, the last of the US indices we'll look at. NASDAQ, here we go. Absolutely. Still powering away, the NASDAQ. We think we were doing the seminar last week, weren't we, when it was pushing through that sort of 7,200 level. And we have continued higher. It's cleared its highs. I mean, the NASDAQ does look like the stronger performer at the moment. Maybe we'll have a bit of nerves ahead of 73.50, those October highs. But again, like these two other US indices, I think any weakness still looks like a buying opportunity. The level to watch, again, I think the immediate one is, I'm really struggling with dates this week. Where is it? It's the 18th, 17th. Yeah, Friday's lows. So Friday's lows on the NASDAQ 100, around about 72.50. So about 60 points lower than where we are now. So about, so my game plan for this afternoon would be, if these US indices sell off, expect the strength to come back in and have stop losses underneath an obvious level, an obvious low like that. Let's see what happens. We'll come back to it on Wednesday this week and see what happens. So we'll look at the two European indices now. Then we'll jump onto the questions. I'll jump onto the questions. What am I looking for? German 30. Here we go. I mean, the DAX. DAX is always an interesting one. I mean, it does sort of follow US markets eventually, but it almost does its own thing during the day. So there can still be opportunities. Let's take a look on the daily chart for the DAX. So the DAX on Friday pushed out, let me just zoom that in, pushed out to its best levels for the year. Okay, so getting dragged higher by those US stock markets. So that trend off those lows, like the US markets, is still going. We are getting back to what had been a big problem, but again, it's pushing through. 27,600 level. So that's the sort of 11,700, these highs from November, and arguably you could drag it up to about 11,850, the highs from October. So like US markets, we're bumping up against levels that are a problem. It is trying to claw its way higher. So for the DAX, we've got this good trend that's been chugging away now since March the 8th. So that's what, 10 days. 10 days that trend's been going for. Nice little trend there. It's quite weak though. We're on lows for the day for the DAX. So maybe there's an opportunity here, considering what the US market still look reasonably strong. For me, if I was looking for a buying opportunity in the DAX, let me just make this a really short-term chart, 5-minute chart. I think the levels to watch going into this afternoon, the DAX did sell off Friday afternoon down towards 11,620. It's currently 11,650. So I think if I was looking to trade it, the closest I would want my stop is the other side of these lows from Friday, which were also, and they weren't quite the lows for the day. So the lows for the day on Friday down here, 11,575. So I think going into this afternoon, 11,575 to 11,600, 620 is an area to watch, because that trend is still up. It's a pretty volatile market, the DAX, but it did move higher finally on Friday. Bit of a wobble into the close. And then today it's had a go at moving higher, but is drifting a little bit. But for me, watch these lows from Friday and see what happens. But, still, like these other markets, still positive, but a bit more volatile day to day. And finally, the FTSE, let's bring the FTSE up. Here we go. So the FTSE 100, the UK market. So the FTSE at the moment is at its best levels since October. So this is the daily chart we're looking at. So best levels since October the 8th. That recovery is still intact. Looking at the bigger picture, there was good support ahead of 7,000. It dipped at the end of Feb as low as 7,050. The market had broken out, pulled off, pulled back, and we're breaking out again. So there's probably a couple of ways of trading this. I think we're now breaking out through these highs from mid-Feb. I suppose the aggressive trade based off this daily chart is to be a buyer now, buy into the breakout at 72.84 with a stop loss under today's low. Today's low is 72.27. So you'd have, I don't know, a 70-point stop loss maybe. But if you think the market is going to ramp its way up to here, it's a trade that still makes sense from a risk reward point of view. Perhaps the more conservative approach, we are breaking out through these highs, wait for a sell-off and wait for the market to hook back. Okay, the risk there, of course, if the market does suddenly have a rocket put under it, you miss. But I think it's interesting that we are breaking out through the February highs there. So let's see what happens. Personally, I'd be more inclined to wait to see if the market sells off. But if you think there's some real momentum behind this, there's arguably an interesting opportunity there. So that's it. Let's have a look at some of the questions. So go right back to the beginning. So someone's asked for sterling against Japanese yen. Let's bring that one up. But just to recap, I think stock markets, it could be an interesting week. Stock markets and the euro could be an interesting week. So the pound against the yen. I think we've looked at this a few times before, haven't we? I think there's a couple of things we could take from this. I mean, clearly the story for most of this year has been the pound recovering, running into the Brexit countdown. So we have seen it go from 135 to 147. So we've seen it's almost a 10%. That is a 10% move, isn't it? 10% move against the yen. But we are bumping up a little bit like pound US dollar, but not quite the same. We are getting near to levels that for the last 6 months of last year proved a real problem for the pound. Where people thought, well, hang on, the pound up at 150 against the yen is a bit overvalued. And I think maybe that's, if we don't get any Brexit progress, maybe that's the risk now. We can see we've had a few little goes at breaking higher last week, and we're starting to turn down today. So arguably, if you wanted to be a seller here, you've got sterling against the yen, you've got a logical place for your stop loss, the other side of 150. But I think it's interesting. Let's keep coming back to it and see. But I don't see it sailing through 150 against the yen unless something absolutely crazy happens. But because it's been such a problem all the way back to May last year, actually. It's been a massive, massive barrier for sterling, 150, and we have had quite the run since early Jan. So maybe it's that. Yeah, someone's saying double top. Well spotted. I can never spot these things. I just don't have an eye for it. Yeah, I mean, from a textbook point of view, an Anorak would disagree with you and say no, it can't be a double top, but it's pushed to new highs. But I agree with you from a potentially that's what we're seeing. It will be interesting if it drifts back towards 144. Do we see it bounce or do we see it break again? Let's see what happens. DAX, we did the DAX, did the FTSE, did the S&P. Can you go over stock Z? What is stock Z? Hang on a second. Z. Do you want to tell me what it is? Let me have a. And the other one was stock HTZ. Let's see if HTZ comes up. Do you mean Hertz? Is it Hertz? Let me have a quick. I'm just gonna have a quick look on another thing and see if I can figure out what these are. This little cryptic test on a Monday. Well, HTZ is Hertz. So let's have a look at those. So the car hire business. And while I'm looking at that, let me have a quick look at what Z might be. Zillow Group. Okay. There's Hertz. It's maybe a little bit dull, isn't it? It's a little bit, we've been, I mean, what would you do? You could almost argue the trend that's been in place since 2017, October 2017, is still down. I mean, it really struggles with 2250, but there's a base at 12.5. So with a base at 12.5 and a ceiling at 2250, we are pretty much slap bang in the middle, aren't we? So I think it's a bit of a flip a coin one. So for me, I'd be a buyer down here and a seller up here. Here, nothing. If you really wanted to buy them, if we were a buyer here, I would have a stop loss underneath those lows from last week. But I think it's a little bit directionless, that one. A little bit drifty, isn't it? So nothing too exciting there. Zillow. Let's have a look at Zillow. Did we look at those of the week? They recently float. Am I getting confused with somebody else? Yeah, so no, I think I'm getting it confused. It's really volatile, isn't it? I mean, you can see the gaps. I'm assuming this is gapping on earnings, where we have it close one day at 58 and open the next day at 49, and again similarly gappy down here. I mean, for me, I'd probably rather be a buyer than a seller. We have had a recovery since November. Did we have results recently? So I think there's a couple of ways of doing this. If I was a buyer at 37.60, probably the closest I would want my stop is the low from Feb the 21st before it gapped, presumably on results. So I think that's interesting. I think this recovery is still going. We did see strength coming back in on Friday. Maybe the more patient approach to see how it performs today. But it's interesting, I think, because if we flip this over to the hourly, that gap will be more pronounced. There we go. So it closed at 35 and opened the next day at $38 a share. So you would expect this whole, if we're going to see this positiveness continue, this whole sort of 32.5 to 34 hold any weakness. But maybe an interesting one to watch going into today. Zillow, individual stock. Is there a course at month end in London? Yes, it's a week on Saturday at Heathrow. We're doing this free trading strategies course. The website is nearly finished. The web page is nearly finished, and then we can actually tell people about it. So hopefully tonight the web page will be up, and I will push it on Wednesday. But if you're around on March 30th, it's been run by me. It's all free of charge. There's no catches, and we're doing it at a Heathrow hotel. And I hopefully will have the website by Wednesday of this week to put up, and people can register. So if you want to come along to that, we'll do a whole day on trading strategies, what sort of stuff works, what doesn't, money management, risk management, all that sort of stuff. So keep your Saturday free. Okay, that's it, I think, isn't it? That's all the questions. So thanks for coming along. So like I say, we're going to do this next on Wednesday. We'll do it 10 o'clock Wednesday morning, just to see if earlier morning ones are more popular. To never miss out, if you click on the subscribe and the alarm bell thing, even if you can't make it at 10, the recording, like they always are, is available straight away afterwards to watch from the channel. And I think this week could be an interesting week for stock markets, but they had a very strong finish last week, and maybe that's the one to watch, and that gradual euro recovery. Okay, we will leave things there. As usual, thanks for coming along, and hopefully you can make it later in the week.